going to bring in Pomp Investments founder now, Anthony Pompliano, where we're going to talk about something much simpler than the intricacies of market structure here, because you do have Bitcoin prices back below $65,000. What's happening under the surface?
Yeah, for context, this is a pullback for ants compared to what Bitcoin historically has been through, right? In previous bull markets, Bitcoin has experienced 30% drawdowns 5 or more times. So on the way up, in 2017, we went from $1,000 to $20,000. There was multiple 30% drawdowns. Right now, we're about 13 to 15% drawdown. So in historical context, this is actually a very small drawdown in a bull market. Now, the other thing that's happening, I think, is if you extend out and you look over the last 10 years, in the last 5 years, Bitcoin's up 1,500%. The S&P is up not even double. If you go back 10 years, Bitcoin is compounded. The compound annual growth rate of Bitcoin is 60%. The S&P is 11%. And so if you compare those things, if you want volatility on the upside, you're going to need some volatility on the downside to get there. And so I think that just keeping the historical context is important because this is a very, very small drawdown compared to what we've seen in the past.
But does it mean that traders really ought to buckle up here and expect potentially more volatility, further drawdowns ahead?
I mean, there is some irony in the fact that Wall Street came in, and when the ETFs were approved, immediately the price crashed, right? Kind of like welcome to Bitcoin. And then we break all-time highs. And 3 of the last 4 times that we had broken all-time highs, Bitcoin's price had doubled in 18 days or less. And then all of a sudden we get a 15% drawdown. And so I think one of the lessons of Bitcoin over the last, call it 3-4 years is no one knows what the future is going to be. And we've even violated some of those historical rules that people held kind of as these like holy rules, right? We had never seen Bitcoin go below a previous all-time high. We had never seen Bitcoin hit an all-time high before the halving. Both of those rules got broken. And so I think we're in uncharted territory here. And people have to understand this is like an 80 vol asset that, yes, it's been the best performing asset, but it is very, very volatile all the way up.
You've been in this space for quite a while, relatively speaking, because it's a relatively young space. You're known for a couple things, being early to the space, but also making quite a few private investments when it comes to crypto, when it comes to blockchain technology. Given that we have emerged from the crypto winter, how would you characterize venture capital interest right now around crypto versus where we were about a year ago before this bull market?
So venture capital interest for sure has increased. We've seen a lot more capital flow into it. But what I think is interesting about crypto is there's private markets and public markets, but the public markets are not like in traditional technology, right? In traditional technology, we have the best companies staying private for longer. And so the returns available to you in the public market are not nearly as attractive as, let's say, an early stage investment. In crypto, that line is much more blurred. And what I mean by that is you can go and you can invest in a seed round, a Series A, maybe even a Series B of a private, kind of normal equity investment. But if you're buying some of these tokens in the public liquid market, they still are early stage investments, right? And so you have liquidity, which obviously changes kind of the way that you think about risk and reward. But 2 is there's still a lot of asymmetry. And if you go back, there's maybe the last cycle, Solana was kind of the famous example. Anybody in the world who had an internet connection could have gone and bought Solana for $1 on liquid exchanges. It went up to $250. Those have historically been returns that have been reserved only for private market investors. And so again, it doesn't mean that they're all going to work. They're all early stage, type things. And so there's a lot of risk. But I do think that there's a more of a blending. And so when you see interest come back in the public market, it's also coming back in the private market.
Hey, one of the promises of crypto has been this idea of democratization. This idea that instead of it being controlled by a small number of very wealthy people, the masses, for lack of a better term, have access to it. I was pretty struck earlier today when I saw that Michael Saylor's MicroStrategy now holds 1% of all Bitcoin that's ever going to be created. Does that concern you?
Not really. I mean, Cameron and Tyler Winklevoss, they've owned 1% for a decade or so, give or take. And so there's a number of different organizations or people who have, 1%, 0.5%. What I think is really interesting is as Bitcoin's price has been moving up, there's a report that came out that 1,500 wallets per day were reaching the $1 million threshold. And so,
right. And we don't know if those are individuals. We don't know who those are.
But let's just say, some portion of them are individuals. And so Bitcoin is essentially minting millionaires on the way up. Now, how do you think about what's like the ideal distribution, right? Does everyone in the world get 1 Bitcoin? Well, there's not enough for that, right? How do you kind of view, okay, if we could perfectly plan distribution? Well, the beauty is this is a free market, right? It is kind of the epitome of what economics and a lot of economic theory has always pontificated about. And so what we're seeing is people are buying Bitcoin at the price they kind of deserve, right? If they've done the work and they understand it, they start to buy it. Their access to capital, right? It's not like Michael Saylor has bought all the Bitcoin with his own money. Actually, I would argue that Michael Saylor doesn't control control all that Bitcoin. What happens is he's got debt investors, he's got equity investors, he's got himself, et cetera. And so there's a lot of people who kind of have their hand in the cookie jar of that Bitcoin.
We're talking so much about Bitcoin, and we should say that you guys are hosting a Bitcoin Investor Day in just a couple days. But it begs the question, what about everything else but Bitcoin? You see so much interest that has just flown back into the markets. You can call it exuberance, you could call it a bubble if for some. What about the meme coins?
So I think right now the market story is Bitcoin and meme coins. And frankly, they're both right? That's kind of the crazy part about this market is the Bitcoin investors have been right. We hit a new all-time high. Everything they've been saying is now getting repeated as talking points by some of the most respected people in finance. But on the other end of this, human nature is gambling, right? We have government-sanctioned lotteries, et cetera. And so if I say to someone, hey, there's somebody over there who put $500 in the thing, went to sleep, woke up, and it's now worth $25,000, there's a lot of people in America who say, well, I'm interested in that. But this just isn't an American story. It's a global story. And so we're seeing these meme coins work. Now, again, it's almost like a video game for adults, right? I don't like playing video games that much. I play every once in a while, but I'm not confused as to say that's real life. And I think these financial assets are very similar. The odds that these things actually have real value or are kind of tethered to anything in the real world are very low. But there are people making real money doing this. And I would argue it's no different than what we see in the stock market many times. People are gambling on, zero-day options. Well, if I buy a meme coin or I do a zero-day option, which one has better odds? That's pretty hard to compete.
Anthony, we're going to have to leave it there. Always good to see you. Thanks so much for joining us on a Bloomberg Crypto. Pomp Investments founder, Anthony Pompliano.